we have consolidation and then market reverse. So basically, schematic happens where there is supply, right? So at a supply area, right? So where the market is basically oversold, overbought, sorry, right? So as you know, normally how I identify schematic is I use the divergence. So because more than likely where there is divergence, there is a schematic present. So if you look at this, right? So the market is making higher highs here, but on the R side, the market is making lower highs, right? So this means that this is divergence. So once divergence is present, most of the times there is a schematic here. So as you can see, right, you have your PS, market is in uptrend, so you have the preliminary supply, the buying climax, the AR. As I said in the last video, I am not going to explain what each of these acronym means because they're literally right here in the course for you guys to read it, right? So it would be a complete waste of time to go over that again, right? So as I said in the last video, you can basically use schematic to basically identify the direction of the market, right? And when it is changing trend. And you can also use it to get your entries more precise because as I said before, most of the times when you see a Wyckoff, it's in a consolidation. So rather than sitting or entering at the start of a consolidation or within a consolidation where you can get stopped out like multiple times, Wyckoff would basically show you where to enter at that at the right time, basically when the move is about to happen, when the consolidation is about to break. So as you can see in this diagram, the market is in an uptrend on the higher time frame, which is the 4-hour time frame, right? And at this point right here, the market starts to slow down, create divergence, and obviously a Wyckoff schematic was present. However, at the UTAD, right, in this higher time frame schematic, where there is, well, your UTAD on the higher time frame would be where you're looking for entries. And if I go on the lower time frame, right, this is what is within this UTAD right here, right? And what is this? This is another schematic, right? So schematic can be used to basically get your entries precise, right? So right where there is the basically the last drive on the divergence, you see a schematic present here, which means that this is where I want to start looking for my entries. And note, this is also a consolidation. And on this 5-minute time frame, what do we have? We have an uptrend, just like on the higher time frame, right? So we have market in an uptrend. It basically give us the preliminary supply, which is the last resistant area within before the consolidation. And if I look at my, let's remove this, if I look at divergence, if I look at the RSI, right, what can we identify? We now see that right here from the buying climax to here, the market basically is creating higher highs. And what do we see on the RSI, right? Market literally in a downtrend, right? So that means that what? Divergence is also present here, right? Now basically the distribution is the opposite of accumulation, right? So the acronyms are a bit different because, you know, in the accumulation you have selling climax, however on the distribution you have buying climax because market is going up as opposed to going down. You still have your test, you still have your AR, and you have your sign of weakness, right? This is minus sign of weakness. And then you have the up thrust, and you have UTAD, and then the test and the whole work. So in the accumulation, the U-tide would be acting as a spring. So this is basically the last point right here where it acts as a liquidity grabber. So it takes liquidity from all previous structures, right? So it take liquidity and induce buyers, right? And then market falls, right? So this is the last point in the distribution schematic, and then after that you have your test, right? Now the test is not always the safest place to take entry unless there was a break of structure, right? Now if you look at this, the market broke structure from the test, and then you have an order block right here, and then the LPSY. So this would be your safest place to take entry, right? And then market push all the way down. This would be your first take profit, right? This would be your first take profit. But remember, this is a higher time frame schematic, so based on that, the direction of the market would be going down for a long-term period. But if you're just intraday trading, this would be the area where you take first profit, right? Because this is first obvious structure, right? So if you were to hold this trade, basically you'd still be safe. But basically market come back up, maybe on the higher time frame. On the higher time frame, there's a point of interest here. So let's just look at that quickly. All right, so yes, there's a point of interest here, and the market basically came back into this higher time frame point of interest, which is on the 1 hour time frame. And look what the market did when it came back to that point of interest. So this is why time frame correlation is very important, because you would have think that the schematic here is complete and then market will just fall to maybe 300 pips because this is higher time frame. But if the market has a point of interest, remember the market was in an uptrend before, right? The market literally just broke higher time frame structure right here when it did this. So obviously if it just broke 1 hour time frame structure, you're gonna get a pullback, right, into premium price to continue to sell. So if you're not correlating the time frames, then more than likely you would probably have your stop loss above this structure here, or you got an entry here and trying to hold it, or whatever the case may be. So you have to be watching higher time frame. The lower time frames are mainly just for entries, or if you're intraday trading and you're not looking for like swing trade, a 2-day trade, a 1-day fully trade, or whatever the case may be, right? So the market basically came back to a 1 hour point of interest, and it literally created another distribution schematic. So this is distribution schematic, and schematic overall is good for basically identifying areas where the market wants to turn from, right? So here again, as I said, I'm not the chart is self-explanatory when it comes down to labeling, although majority of the time schematic won't be perfect, right? As in the diagram, it won't be perfect, so you have to know the logics behind it and basically what is taking place. But the important thing in the distribution schematic is that the market is in an uptrend, the market starts to slow down, and then you have, notice the selling climax and the buying climax, you always see a peak. So right here it's at its peak, so the market will move faster. It's basically oversold here. If you look at RSI, right, at this point right here, you notice it came out of the pink, so it's overbought, right? So it's overbought right here, right? So that is the buying climax, right? And the selling climax would be oversold, right? And so look at this schematic. It's not perfect, but you can identify them, and it did all that it was supposed to do, right? Then you have the test, which would be your entry here, right? Because we broke structure right here. We broke structure here. Market tested, market pushed down, market came back to retest in premium price. So basically the market overall is about structure, right? It doesn't matter what you do, it all boils down to structure. So market came back to premium price, created this LPSY and then market push, right? But coming down now, right? Market create preliminary support and then selling climax. So you have this sell off, right? So you see the two things, right? Market gonna create a accumulation schematic to push price back to the upside, but right now we're not looking for price to go to the upside because we just created divergence and higher time frame, which means that we have supply here. So the market wants to sell on higher time frame, so we're still looking for sells. But you have to keep that in mind, that the market can still create reaccumulation and push back to the upside. However, this is not reaccumulation. The market just came from a distribution and now the market is redistributing. So this is just a little consolidation that the market does after our distribution schematic, right? So this is called a redistribution, right? So this is labeled on the charts as well, so I am not going to go over the labeling too much because it is self-explanatory again, right? There is really nothing to schematic more than just watching structure, and basically it's the same thing on the chart. So you can basically just copy the charts, right? So if you look here, the market basically created an AR which set the range, right? So this set the range for the redistribution, right? Market pushed down, created a test, and then market literally created a bunch of liquidity. So there's a liquidity trap above here, right? Market pushed down, created the sign of weakness, took out all this liquidity, induced sellers to the downside, and then market pushed back, basically testing outside of the range, inducing buyers, and then what? Market came back right inside, and then market tested. This wouldn't be the safest place to sell or to get a re-entry, because remember, you'd have gotten your entry up here already. So all of this redistribution is just for re-entry. So this is not the safest place to take a entry, the test, right? Because this did not break structure. So as far as I'm concerned, this is still in an uptrend. So you have to keep structure in mind, guys. So this would be still in an uptrend. Yes, the market failed to create a high, but the market can do a complex pullback and then push to the upside. So right here, we'd have to wait until the market break this structure here. So the market did that, and then the market literally came back and tested this inefficiency. So this would be your entry where redistribution is concerned. Market broke structure to the downside. So market broke structure to the downside, market came back to retest, and let's see where that inefficiency was. So that inefficiency was in discount premium price, right? So market literally came back to premium price, tested the inefficiency, and pushed down. As a matter of fact, here we have two entries. So this is the decisional entry. So right here we have the decisional entry and we have the extreme entry. So you could basically play both of them. So risk 0.5% here, 0.5% here, depending on the amount of percentage that you're risking. And because this is a higher time frame, you know that you're gonna look for basically a huge move, right? So once the schematic plays out, you're looking for the market to basically push all the way down to the downside, right? Could probably be looking for somewhere around here where I see like an inefficiency right here. Somewhere around that region. This is what? 297 pips. Market retracing correctively. 342 pips. So yeah, so because we had this distribution schematic on a higher time frame, so what it does, it tells us that the overall direction of the market will be trending down for some period of time, and then we use a smaller time frame schematics to get our entries right at that supply area. So that's it, guys. That's it for distribution schematic.